Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Solar installations continue to go up around the world, but solar energy stocks have not performed particularly well recently. So what's the reason for that? That's what I want to dig into in this video because there's a few answers going on. And they may have a long-term impact on the industry. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on those notifications so you know when a new video comes out. I want to start here with a stock chart of some of the biggest solar companies in public markets right now. You can see that First Solar has still actually performed pretty well despite a recent pullback. Same thing goes for SolarEdge. I'm recording this before they report earnings, so we'll see what their first quarter numbers look like here in a couple of days. But Enphase, Sunrun, and SunPower are all coming down pretty sharply. So what's the reason for that? The first thing I want to start with is talking about interest rates. Right here, you can see a 3-year chart of the 3-year treasury rate and the 10-year treasury rate. These are two benchmark rates that a lot of people use for judging how much the cost of capital is for new installations for things like solar on your roof. Whether you're building a small solar installation on your roof or a large one in the middle of the desert, those projects are oftentimes financed over the course of between 10 and 30 years. So when interest rates go up, that means that the financing cost for those projects increases as well. Just the same exact way that when interest rates go up, it's more expensive to buy a home if the home's price is the same, just because that mortgage cost goes up. It's the same dynamic in the solar industry. So why are we seeing companies like Sunrun and SunPower pull back? Well, in part, that's because if they're going to make the same return on the projects that they were building in the past, they're going to have to either charge higher prices or get price cuts from some of their suppliers. So that's the dynamic that's going on there. They are specific to the residential solar market, but they're two of the biggest players there, and they're oftentimes trading inversely to what interest rates are doing. On the supplier side, and specifically with Enphase and SolarEdge, they're just downstream of those residential solar installers. So if Sunrun and SunPower are feeling their margin pressure, they're going to put pressure on their suppliers. There's going to be two impacts. They're either going to say, we're not going to be able to pay what we used for some of these products, or there's going to be falling demand because they do have to pass those costs on to customers. And if solar isn't quite as cost effective for customers as it previously was, there's going to be just lower demand. So both of those things are going to be negative for all four of those companies. First Solar is in a little bit of an interesting position because it's making solar panels, is focused solely on that. Other companies are doing the development, but it has proven that it has a technology and a cost advantage over its other competitors in the solar panel space. So it has pretty solid margins right now. It's also about tripling production. So it's going to have a lot of operating leverage as it brings those new manufacturing plants online. So that's why we should see profits increase over the next few years for First Solar. And they're also selling primarily into the utility scale market. So in that kind of market, projects are built over the course of multiple years. So there's much more line of sight that you can see. They're sold out, for example, through the end of 2026 right now. So we know a lot more about what that business is going to look like, what revenue and margins are going to look like, as opposed to a lot of these other companies who are selling products on a month-to-month basis. So that's really what's going on in solar energy right now. This is one of these industries that has huge tailwinds behind it long term, but short term, there is going to be these impacts from higher interest rates, from competitive pressures, and we've seen this ebb and flow of revenue growth, of profit growth, move to different segments of the industry over time. Right now, I think the biggest one to watch is a potential decline in profitability and margins at some of these equipment suppliers who have been some of the biggest winners over the last few years. So companies like Enphase and SolarEdge, do we see their margins start to compress over the next few quarters? We've seen early evidence of that as competitive pressure starts to mount. That's what I'm going to be keeping an eye on. But this should give you a good idea of why a lot of solar stocks are coming down right now. And if some of those market dynamics reverse, we could see them rise in the future. What do you think about solar energy stocks right now? I'd love to hear your comments in the comments section below. This is an industry I've been following for over a decade, so I've obviously got a lot of interest in it, but love to hear what you think. Subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.